Good morning, good afternoon, everyone. My name is Russ, and as always, we're here on the Data Dash with a special, dedicated, urgent market update, which is related to the CPI print that has been just released. Today is a super important day because on top of the CPI release, which actually for those who already wants to stay with us and see how it affected the market, have been first time within the expectation, first time in 7 and the second time in the last 10. We will see those in a second and how that would affect the market. But on top of that, the Jerome Powell, the Fed press conference is about to happen in few hours. And especially taking into account that European Central Bank has already conducted the rate cuts and Canadian Central Bank has conducted the rate cuts, it's super interesting to see how Jerome Powell would sustain the pressure of journalists and Treasury and Janet Yellen, who are begging him to cut the interest rates. With all that said, let's go and dive into the charts. First of all, I would love today to also cover a potentially promising position in GameStop, and we will see in a second why. I am rarely touching meme coins, but here in that particular situation, I believe that actually is an interesting opportunity here, and I'll share in a second why. On top of that, we obviously gonna cover DXY, also multiple short squeeze candidate trades that I've been giving 2 weeks ago are starting to do really well. Car parts are roughly 9% today. On top of that, SunPower Corporation is also significantly up. We might take a new trade on Unity, and I'll show which one. And then, of course, we'll have to cover what's going to happen with Bitcoin and Ethereum from here, since we could not lose the range that I've been showing in our previous stream. With that said, before we jump into the charts, I still would like to showcase that here we are with 3.3 year-over-year CPI print, and as I mentioned, if you can see from all the time starting from November 2023, we never actually had the situation where the actual CPI print or inflation consumer price index would actually come below the forecast. We had this situation last time in October data that was released in November 14. So that's kind of an unprecedented news for the markets, and that's why you have seen on the pre-open, since this data has been released, we had a multiple spikes, especially late short liquidations that was expected. But on the other hand side, I ask you all to not be like that guy who actually trades the non-farm payroll data in Pakistan. Let's see in the funny video.
So finally जैसे हमने एनालिसिस किया था कि वही 530 को EU और USD डाउन आएगा, अभी आप लोग के सामने एनालिसिस और ट्रेड ऑफ हम लेते हैं. हमने डाउन का ट्रेड प्लेस कर लिया. 4 3 2 1 boom.
So I invite you guys to not be like the boom guy, and obviously those are binary events. Very often people are asking, oh, how do I trade that? You don't trade that. That's the first thing. Like, I mean, there are the ways to do that later with the volatility trading, with a little bit more complex products, like for example, like Strangle or Straddle with options, or Iron Condor, where you expect a particular volatility to actually outpace the expected volatility. But obviously trading binary events is like flipping the coin. Like, you would have so much more fun going to Vegas and just, you know, throwing the whatever you prefer, but then you probably get a free drink on top and a funnier audience around you. So yeah, please guys, be mindful, and first of all, don't blame yourself for not predicting that move. Second of all, don't try to predict that move because this time you think that was actually obvious to me. No, those are not obvious. Well, there are little exclusions to this, and sometimes the behavior of the very particular most important members of the Congress, Treasury, or Federal Reserve are signalizing us what direction this all might take, of course with a grain of salt, and of course taking into account the probabilities. But for me personally, yesterday, that was the reason why today all three core CPI month over month the CPI print itself month over month and the year over year CPI came all three below expectation, and that reason was this open letter dated June 10th that has been written by Elizabeth Warren to Chair Powell, where she actually begs Chair Powell to cut the federal rate from its current 2-decade high, 5.5%, showing that the European Central Bank and Canadian Central Bank have already done that. And this is what she is expecting JPowell to do, to actually be aligned to the main actors of the foreign exchange, because obviously those are normally aligned actions across various central banks, not to cause the additional carry trades or a very strong yield change. And that is what Jerome Powell would be expected to do today at 7 p.m. European time, London time, or at 2 p.m. Eastern time. We will all see when the press conference would start which decision the Fed will take. And here, of course, I really recommend you to watch this conference but not take too many steps just before. For me personally, what I'm doing here and how I invite you to look at the market, let's take an example of Ethereum. Me personally, I went short at 36.40 or 36.30. I always DCA several times. So this is 5-minute time frame. And why it is so clear for me? Well, because first of all, this is a confluence. We are not able to reclaim the Monday low, and Monday range is quite an important range to trade. That's why we always let the Monday range form. My stop loss in this case would be mid-Monday. And the main reason, let me just first project the trade, and the main reason with this very, very short scalp, I would say the scalp that you can normally play between the CPI data release, which comes 1 hour prior to New York Stock Exchange Open, and the FOMC conference, that of course everything can change based on what the decision would be taken. And of course also the market makers are not aware what the decision going to be taken. Well, they're not supposed to be aware, at least. There might be some insights, but this is like beyond my knowledge, obviously, and that's illegal. But nevertheless, they are supposed to not have any hints from Federal Reserve, and everything can change in this 5 hours. However, this is how you can hedge your positions, or can just at least make a short-term profit. Why so? Because we just need to start looking at the range. And what the range is telling us, the range is telling us that wherever the bounces are, we are still in a bearish market structure where we had the high and the low, lower high, lower low, lower high, lower low. And what we're having right now, we're just having the lower high. We are still not able to accept in the previous range of Ethereum. That was between 3,600 and roughly 3,720. So everything that I'm gonna mark right now with the rectangle, all that is acting right now as the resistance for the price to get accepted just yet above. And many people I see already in the comments, they are feeling very much of FOMO because they felt that they missed this little move, this little bounce, and because they are actually forgetting on the fundamental ways to look at the chart. Those people are normally the people who are actually trying to long every bottom, every spike down, and the downtrend clearly is not favoring those type of behavior. In the downtrend you short, in an uptrend you long. If you want to be contrarian trader, fine, then identify the fundamentals and build your thesis and be contrarian, like go into metals when everyone hates them, go into silver mining when everyone tells you that this is like destructive for the nature. Well, it's partially, yes, the case, it's true. But then, you have to understand the long-term implication for photovoltaic panels and green energy and electric vehicles and so on and so forth. So yes, you would understand that later on the narrative would change the same way it changed, for example, for Bitcoin miners, when initially people were saying, well, Bitcoin mining takes so much of energy, but then you understand how much the traditional banking is taking energy in comparison, and you understand that later on there will be an ability to have a dialogue around it, and you are taking the trade in the most hated shape and form at the moment where everyone doesn't want to be there. This is contrarian thinking. Longing every 5-minute bounce is not contrarian thinking. This is just not understanding how the trend environment works. And I mentioned it many times that actually trends are not happening that often. Mostly we are trading within the range. There's normally 80% of ranging environment, 20% of trending environment. But once you get those 20% trading environment and you're not using it to your own advantage, you're trying to constantly concentrate it, that's even worse. So at least if those 20% rare opportunity is given, see the market structure and follow this market structure. That's a super important I want to emphasize. Now, just to close up on Ethereum, absolutely no interest until we accept above 3,650 and start accepting above this range. How long it might take? Well, it might take Jerome Powell to speak, or maybe if he provides the certain guidance that spooks the market, we might go lower, and I'm happy to accumulate more Ethereum around 3,200 with the Titan validation about 3,000, and see maybe we do one more spike down to cleanse up open interest on the way up. So there's no rush here. Now, when we are looking at the Bitcoin chart, we also clearly see this line. I didn't add anything from all the streams. This is the range where we are hanging for multiple weeks. Nothing has changed here. So inability to lose that range or quickly recover it with 4-hour engulfing candle obviously led to this expansion and the positive news. Does it mean that you have to go all in and longing Bitcoin right now? No. Why so? Well, exactly for the same reason. High, low, lower, high, lower, low. How does that look like? Well, it looks like we are about to print the lower high, and I am right until I am not proven otherwise. So what you would like to see on Bitcoin is following. A break of structure first of all. So you want the Bitcoin price to go above the Monday high, roughly around $70,000, and then you are looking forward to long it on the retrace. That's how you can take that trade. Would it go to the very bottom of the range, around 68,000? We don't know, but that's the reason why you can dollar cost average. You can start building your position around Monday low, adding a little bit more here and a little bit more here, all the way to today's daily open, which was around 67,200. This is the logic for your thinking. And of course, you would also see how other confluences play out. For example, DXY is clearly acting very bearish here, which is favoring the Bitcoin price, right? So you're also gonna come and open and see the Euro USD chart, and Euro USD chart so far looks very strong. But again, can the strength be from just us covering that forex gap that has been formed after many right and far right parties have been voted for during the European elections? So we had that gap and that's red open. Yes, that can be simply the liquidity grab of that zone, but you would see for now the market structure is still bearish. So first you always look in the market structure. You don't try to think that every bounce is the ultimate bounce. You let the market prove its direction first, and this is extremely important. That's why I want to emphasize in every video, bringing the theoretical context, the concept applied to practice. And I think here this day to day is super important to remind you all about the market structure. Speaking of alts, we have different cases, different scenarios. For example, if you are looking at the dot chart, let me take away all these lines because actually they're not needed, just simply to see the market structure. What we see here, we are swiping some of those stop losses of the traders that went long in the bottom of the range and accepting above this order block. That's a very bullish sign. So here you can already think in a following manner. I would like to have my long position DCAing around here with my stop loss below the wick and my take profit around the range high, which provides me a good 2.5 to 1 risk reward. However, when you're looking on the other chart, for example, curve, where you're gonna see the picture looks very, very different. We are actually accepting below the range. And what does it mean in that case? Well, it means that it can just simply be the retest of the range low on our bleed down. And then you can look at the weekly or on the monthly, and you can see if there is a lot of liquidity down there. Actually, not that much. But nevertheless, I am not interested in buying more curve until curve is actually accepted at least 2 4-hour candles, especially taking into account the crazy volatility that would come in a couple of hours today. You want it to give, unless you're a 5-minute scalper, you want it to give some time at the level so that you see the market actually accepts curve. So your target as a trader is not to catch the absolute bottom of 34 cents, 34.7 cents. Your target is to increase your probability while going long, knowing that there is a certain confirmation for that trade to take place. That is very important, and I'm reminding it once again. We mentioned the DXY weakness, but one thing which is much more fundamental that I didn't mention, and that has been on the news during this weekend and Monday, is the fact that the petrodollar deal between Saudi Arabia and the US has been ending on the June 9th. And this deal has been in place for 50 years. So that basically obviously also signifies to investors that there's more and more transactions that can happen outside of dollar, reducing the demand for dollar as the global currency, and that causes that DXY drop that has been initially slowed down by the risky European elections, the fact that National Assembly in France has been released that haven't happened since the Jacques Chirac's time of 1998, and so on and so forth. So a lot of conflicting news, both negative from Europe and from US. The European news have been digested, and now this weakening in the dollar obviously providing the spike for the risk on assets. But the most important thing, and here I'm gonna touch the link in the corner for you to see what are the 4 signals for me to signify the recessional start. So no one on earth can predict exactly when the recession would start. There are people like Nassim Taleb that would predict 10 out of last 2 recessions, basically calling the recession every year. But then you think as a trader, if you're constantly looking for a recession for a decade, like what's your profitability? Are you gonna do 5% a year because you're constantly sitting in cash? Well, yeah, that also happens. So we are trading and we are reevaluating the market when it goes. Yeah, so let's not be those people who are telling me, oh, you're not certain about what happened. There is this guy on YouTube who knows for sure I'm going to follow him. Guys, please unfollow the people who are telling you everything that's going to happen with the absolute 100% probability, because the world of macro trading obviously assumes that different scenarios would have the different interplay and would cause the different effect. And here we are in a very complex world. I think it's like the most complex 5-dimensional chess that I ever played. Well, for multiple reasons, we're going to cover it in a separate video when I would love to share with you all the trading lessons that I learned, and also like maybe top 10 trading books and trading psychology books that I read. So we're going to cover more about those things in a separate video. But for now, coming back to the markets, there's a lot of things that can change, and please be aware when we are speaking about the video of mine that the yield curve 2-year, 10-year, the uninversion of that can already cause a tremendous signal for the market to start taking profits. And if the Federal Reserve would start playing with the interest rate, that might happen sooner than later. That's why despite today we can have a time of a prolonged euphoria for like a week or 2 or 4 during the summer into the holidays of the hedge fund managers all the way into August, we can have this prolonged euphoria that is associated with Fed starting to speak about the cuts again due to all the pressure, due to all the senators' letters. But when it actually happens, we might have the severe correction in the market because of 2 to 10-year inversion. For those who haven't seen, please spend 15 minutes on that video. It is extremely important one. But of course, we would like to take advantage of today's volatility, and I will be today online, especially in my Telegram group, so we can, after Jerome Powell would start his speech, build up more positions with a higher conviction. And I actually love to do that also on DEXs because of multiple reasons. The slippage, for example, on D-Gate is very low, so we have an amazing opportunity here to trade straight from the wallet without the risk, of the particular centralized exchange, like in the case of FTX and the rumors that we had last year, with multiple other exchanges to go bust, right? So you can basically connect your wallet, trade as much as you need, disconnect, and great opportunity as well on D-Gate, for example. The reason I like it the most is not just slippage, but it's also all the trading pairs which are available, including meme coins like Shiba, like VIF, like meme, but also like, of course, the pairs that I would normally trade, something from the top 30. I normally would like to trade either betas to Ethereum like Arbitrum, Optimism, like Lido, Ethereum itself, or also potential projects among other L1s. And there's the reason why, for example, I showed you I would be looking to open the trades on Polkadot and on other altcoins that are in the bottom of their accumulation range, for example, like Atom. So those are my 2 cents of how you can approach that. Now, coming back to the charts, I wanted to show you one thing which is very interesting for me here. And that thing is the fact that during his stream, RoaringKitty has revealed his position, and his option position is actually $20 calls expiring June 21st. 120,000 calls at the $20 strike price. What does that mean? So 120,000 call contracts is providing to RoaringKitty an ability to come to an exchange and to claim his right to acquire 120 multiply 100, meaning 12 million shares at a $20 price. And as soon as we are trading above $20, and we are currently at $30.20, this provides him an ability to capitalize his move the same way as Michael Burry has done, for example, during 2008 crisis. So if there is a rich individual or a banking institution, and maybe we don't know how much money he has, maybe he can finance part of those, including the ability to margin that trade, use the margin account. Maybe he has enough of already money from the trading he's conducted in the past. So long story short, this is not kind of a trade I would like give here on YouTube and say, let's buy GME. This is, in my opinion, super irresponsible. But I'd like to know that trade down, put it into my watch list monitor and share it with my Telegram group, because of course that requires like very high precision and management, and things can go south. And you know how those trades work. They can be halted. There can be multiple issues related, of course, to regulations and legislative environment, and to which degree it all can be stopped at some point for further investigation and so on. But the point of mine here is like I'd like to do more of those trades actually when I feel that I am responsible in real time, and that we can take a decision to leave the trade and a break even, or to let it run with a tight stop loss. Obviously it's not possible to do it in like a week by week basis simply on YouTube. So with a link down in the description below, everyone who is a subscriber to the DataDash newsletter, which is roughly around $30 a month, so like less than $1 a day, everyone gets an access to my alerts and my reads on the market for free. And when it comes to the reads of the markets, I also outlined in the Telegram group that silver correction might be already there. We might of course go to also 28.5. It also very much depends on how we're gonna act here in that range. So far, of course, on the CPI news, we start accepting above, but didn't really get there. So we might, of course, swipe a lot of those poor lows. So I'm not afraid, to be honest. If silver goes down to $28.5, it by no means invalidate my bullish macro thesis. We're going to be at $48, and I would put a link to that video the same way I put a link to other trades we've done. For example, when I was telling you guys to not sleep on Apple, that's exactly what happened. If you remember, that was our Apple trade. So we entered Apple at around 170, 173 and the lower part of this range. And now Apple has immediately within 2 days broke out from here. So yeah, it's 28% trade in a matter of 3-4 weeks. And I'm sorry for people telling me you need to trade more crypto. No, I don't have to trade more crypto. If I'm having the 30% moves out of a very safe, secured blue chip stocks that you are preferred being chopped somewhere, then you're not able to make the right choices. It's not only about like putting more petrol in your car and pushing the acceleration. It's about picking up the right car, picking up the right road, and knowing the direction on compass of where you go. So I was saying 2 months ago, when there is a time to trade crypto actively, we're gonna trade the shit out of this market. Where is the time to actually be in the commodities or in the tech stocks there is an opportunity I don't want to miss, especially since that provides me also an ability to sleep better and to have the higher positions and also use options to hedge and so on and so forth. So many more advantages that are not available for the crypto traders in that particular case. But it doesn't mean that I am biased. I'm happy to trade crypto when the volatility kicks in, when the Bitcoin dominance start accepting down. I don't feel like very excited to micro trade alts moving 3% here and there, knowing that the Bitcoin dominance is acting very bullish. If you're gonna look on its chart, you see we might even break out from this diagonal meme lines, and what's gonna happen from here? Well, maybe alts are gonna squeeze down even further. So please keep in mind that once this line is broken, there is absolutely no need to push the gas on alts. Yeah, so please be mindful of those. I keep repeating it. That's no need to force the market at any given point with the current scenario where the risk off is obviously a better place to be. And by risk off, I also mean other asset classes. And one of them, and the last one I'd love to give for today, is oil. I am actually I had provided the signal into the group, and I start adding oil 2 days ago. I think that this was the ICL or intermediate cycle low, and from now onwards we're not gonna come back to those values at around 70. We might do something like that, and all this downtrend will be recapped, which is normally also quite a bearish move for the risk on markets, because as I mentioned in one of the streams, oil is highly correlating with the inflation and CPI. But not only, it also provides less of the purchasing power for the US consumer. So when the oil prices are higher, obviously the ability, people's spending ability is going down. But on top of that, also the products are getting more expensive, and that's reflected in the CPI print, and CPI prints are obviously affecting the yield market, which affect in return the stock market. So it's like a double pressure on the asset prices that you really need to consider as well when you're trading crypto. So yeah, that's one of the things that's a clear example how oil would affect altcoins. I am also very bullish on the VanEck Oil Services ETF. The ticker is OIH. And you see here like how those commodities and ETFs that are driven around commodities are actually trading very, very clearly in those channels. So yeah, it doesn't harm me to build up a long position here in the bottom range of this channel, assuming that we're not starting to accept below the channel, targeting the upper band of this channel. Of course, it's a little bit flexible here. Please, guys, also don't take this take profit as a mantras. It's not obliged to touch 454. It can also touch 450 and reverse back, simply because a lot of people are expecting the same. And when the market participants are all expecting the same, they are the forces in the market that starts front running them to start offloading the positions to the greedy people who are actually trying to maximize 1% out of 22% move. So that is also something important to remember. One more trade that I feel quite bullish about is the VanEck Semiconductor ETF, or SMH. I am definitely seeing that this chart is overextended, and that's why I'm not offering you SOXL, for example, which is the leverage, 3x leverage semiconductor ETF. I was not yet in the DataDash family, but I entered back in this range here around $8. I sold that in around this area of consolidation, roughly around 46. So I'm not greedy, to make every move possible, but that was an incredible 300% move from the lows. And what happens right now is that obviously there's like probably a lot of people who would build their short position around this double top. So yeah, all these double top people or people who are trading patterns on the daily are normally to be punished, of course. So yeah, I'm once again telling you, don't yet run into the semiconductor ETF blindly or on leverage, but consider building position there, because it exactly reminds me the Apple chart when we had this double top on top of the range and then be breaking out of this range. And yes, for sure, the momentum is still there. So you might have a tiny allocation. Guys, I gave a lot of trades for today. Please keep in mind that everything is subject to the change, all based on Jerome Powell's speech. So please don't take positions just yet, especially if you're not feeling like very confident, especially during conducting intraday scalping. If you are here for the long term and want to have the higher conviction trades, try to watch the conference, try to see how the market reacts, because there will be a lot of bots and algos that actually would conduct a certain trading signals based on interpretation on the words that Jerome Powell would use, for example, cuts, higher, for longer, etc. So there will be a lot of volatility during that 1 hour, 1 hour and a half, and then you have the time to step into the trade. With all that said, I wish everyone an amazing success, love you all, and stay tuned.